Thank you very much, Tracy. Thanks to all of you for joining us today. Good afternoon, good morning for some of you, I know on the West Coast. It's great to have you here. We're so pleased at the American Library Association to collaborate with the Consumer Financial Protection Bureau on a number of different programs and activities, and this is definitely certainly an important one, especially personally for many of you. The program today is Public Service Loan Forgiveness Demystified, and we have a couple of introductions, and then we'll have some of the CFPB staff go straight into providing hopefully a lot of good information that will be useful to you, but also information that you can pass on to your members of your community who may be asking about if they're to be eligible and how to do that. So with that, I will turn it over to Emily Moras, who is involved with our financial literacy interest group at ALA, and she can tell you a little bit about that before going forward. Emily.
Thanks, Michael. So I'm Emily Moras. I'm the current chair of the Reference and User Services Association's Financial Literacy Group. So it's part of American Library Association, and we call ourselves FLIG for short. This group started in 2017 by librarians interested in supporting financial literacy in a wide variety of library settings. And the person who initiated this group is also a Penn State librarian, Lauren Ryder. I'm in my third year as chair now, and I would like to welcome you all to consider joining FLIG, or at least to join our mailing list. We do encourage ALA membership, but if you are not a member of ALA, our mailing list is open to any person who is interested in financial literacy and how to help their library community build financial literacy through programming and resources. We have members from public, school, academic, and special libraries, and we also have affiliate members such as the CFPB and also FINRA, the Financial Industry Regulatory Authority, as well as other groups which can provide for libraries to promote financial literacy to your patrons and to your communities. If you'd like to join our mailing list, ask me a question, or learn more, you can email me at elm43@psu.edu. That's on the slide. I'll also put it in the chat, and I do have a form to fill out that I will share in the chat momentarily. Next slide, please. So what does FLIG do? We sponsor free online webinars or other online meetings approximately every other month. And in those programs, we highlight a library or a partner group that has resources, programs, or services related to financial literacy that libraries can take advantage of. We promote these to our email list and also through ALA Connect. So if you are an ALA member, you can join us on ALA Connect, just join our community. And if you are on our mailing list, you'll get approximately one email a month from me. I try not to email people too frequently. Anyone is welcome to participate. And if you have a program that you'd like to highlight at one of those events, we'd love to have you as a speaker. Some of our programs from the past few months and past years have included librarians from the Association of Small and Rural Libraries, and they presented on programs for children, as well as those who are caregivers to older adults, as well as helping your patrons deal with the financial impacts of COVID-19. We record these events and we share them through ALA Connect if you can't attend live. We also have had a blog series on programminglibrarian.org, so you can feel free to visit those, and some of the topics that we highlighted were how to build a financial literacy collection, how to handle patrons' financial literacy questions without going into the advice category, and some other great topics from librarians around the country. When we're in person, and we will be back in person at ALA Annual this year in DC, we typically have some meetings as well as speakers. So if you are planning to attend ALA Annual in June, there will be a free pre-conference on Friday sponsored by the CFPB that we'll be participating in. And we'll also have a conference session on Monday of conference about building your community's financial well-being. And then we will also have a general group meeting where you can meet other librarians who are interested in financial literacy. And there will also be an update on the financial literacy education guidelines for librarians. So these are all really great opportunities to get involved, learn from others, and share your experience. And I do have a form that I'll put in the chat when I'm done speaking, where if you are attending ALA Annual, you can tell us. And if you would like to participate in any of our programs, you can indicate that. If you're not, that's fine. You can also indicate on that form if you'd like to join our mailing list and provide me with your email address to sign you up, which again, I only send about one email a month. I try not to do too much. Next slide, please. So if you are interested in joining us and you're currently an ALA member, as I said, you can join us on ALA Connect. You can email me, and we also have a LibGuide that you're free to make use of. I'll put the link for that in the chat as well. There are reading list suggestions for children, adults, and other free resources that may be helpful to your library to build your financial literacy with your patrons. And in the future, we share our upcoming webinars on our email list and via ALA Connect. And if you have a smart device, if you scan that QR code that's on this slide, that will bring up the form that I mentioned, but I will also place that in the chat. We love to hear from people about what you're doing in your libraries and if you are interested in sharing that with other librarians. So please tell us all about that and I will get back with you and see if we can accommodate you at an upcoming program. And now I'm going to turn it over to Scott.
Thank you, Emily. Good afternoon, everyone, and thank you for tuning in to our presentation today on public service loan forgiveness. My name is Scott Filter, and I'm a senior advisor in the Office of Students and Young Consumers at the CFPB. This webinar is intended to help you navigate the recent updates to the PSLF program and how you might be able to take advantage of loan forgiveness for public service employees. Next slide, please. Let's start with our standard disclaimer. This presentation is being made by a Consumer Financial Protection Bureau representative on behalf of the Bureau. It does not constitute legal interpretation, guidance, or advice of the CFPB. Any opinions or views stated by myself are my own and may not represent the Bureau's views. Next slide, please. Today's discussion is going to focus on PSLF, including how student loan borrowers can become eligible, how to apply, and then we'll discuss some recent changes to the PSLF program through a limited waiver opportunity enacted by the Department of Education. We'll also have some additional resources at the end of today's presentation and other materials to help you stay on track to track your loan progress towards forgiveness. Next slide, please. First, a little bit about the Consumer Financial Protection Bureau. The CFPB agency that works to improve consumer finance markets by making rules more effective, by enforcing those rules, and by empowering consumers to take more control of their financial and economic lives. Next slide, please. I'm from a division in the CFPB that focuses on helping consumers navigate financial products and services. We serve the general public, but we also focus on a series of special populations, including service members, older Americans, traditionally underserved communities, and students and young consumers. We help students and young consumers to prepare for financial decisions, such as paying and saving for college, managing their money, building credit, and of course, repaying student debt, all with an eye towards preventing student loan default or other negative financial events in their lives. Next slide, please. With that in mind, today we're going to talk about public service loan forgiveness, or PSLF. PSLF was established to encourage individuals to pursue careers in public service. Those who choose to work in public service often face substantial financial hardship and may not be able to repay their student loans over the standard 10-year repayment period. This program was designed to help those employees provide a service to the public and satisfy their student debt repayment obligations. Next slide, please. So what is PSLF? PSLF is a program where a student loan borrower can qualify for loan forgiveness by paying their loans for 120 months while working in a public service for a qualifying employer. And we'll break this definition throughout this presentation and go over the qualifying criteria to reach PSLF. Next slide, please. But first, a little bit about the temporary limited waiver from the Department of Education. On October 6th of 2021, the Department of Education announced that for a limited time, borrowers can receive credit for past payments that would not have otherwise qualified for PSLF. With this limited waiver, if you have been working in public service but have never explored PSLF, or were previously discouraged from taking advantage of PSLF because you had the wrong type of loans or wrong repayment plan, this is the time to take advantage of the limited waiver and consider whether you want to explore PSLF. Next slide, please. Under this limited waiver, any prior payment will count as a qualifying payment. It does not matter the type of loan you had, the type of repayment plan you had, or whether that payment was made in full or on time. You can receive PSLF forgiveness even if you are no longer working for a qualified employer at the time of your application for forgiveness, or when you receive actual forgiveness of your loans. Now, this is a truly time-limited opportunity for the waiver, and it expires October 31st of 2022 this year. To receive credit for past payments, you must take action prior to this deadline. Your next step depends on what type of loans you currently have, and we'll get into that in the next few slides. If you're unsure of what type of loans you have, you can log into the Department of Education's website, studentaid.gov, which is on this slide here at the very bottom, to find out more information. All of your federal student loans will be listed after you get into that website with your username and password. You will need to know what type of loans you have before you can move on to the next step. Next slide, please. To qualify for PSLF, you must make 120 payments while working for a qualifying employer. Any federal, state, or local government or military service will be considered qualifying employment, along with any nonprofit that is a 501c3 or an organization that is providing certain types of qualifying public services. Now, it only matters if you work for a qualifying employer. It does not matter what you do for that employer. As an example, if you work for a public school, all the employees who work there qualify, whether you're an administrator, an assistant, a janitor, or the classroom teachers. Now, if you have any questions about whether your employer qualifies for PSLF, you can always use the Department of Education's PSLF help tool, which is on the studentaid.gov website. Now, the other thing to keep in mind is that you need to work full-time. And that means you must meet your employer's definition of full-time employment, or you must work at least 30 hours a week. If you're employed in more than one qualifying part-time job at the same time, you may meet the full-time employment requirement if you work to a combined average of at least 30 hours per week with all of your employers combined. Next slide, please. Now you need to make sure that your payments count. Only payments after October 1st of 2007 will count towards PSLF because that's when the program was created. You do need 120 monthly payments, but they do not have to be consecutive. If you started working in public service, then moved to a private sector position, you can return to public service later and continue to qualify for PSLF. Now, it's always good advice to keep a record of your payment history, so we recommend that you download a copy and save it for your files on a regular basis. We also recommend that you fill out a PSLF form with updated qualifying employment each and every year so you can make sure that you're on track for forgiveness. Next slide, please. So let's talk about how you qualify for PSLF if you already have direct loans. So if you logged on to studentaid.gov and found out that you have all direct loans, the only thing you need to do is make sure that you have submitted a PSLF form with all of your qualifying employment. If you haven't submitted a PSLF form, you should fill out one with all of your qualifying employment by October 31st, 2022 to take advantage of the limited waiver. Now, if you've worked for several public service employers, make sure you have a PSLF form for each of the qualifying employers, and then all of those forms, again, should be submitted by the October 31st, 2022 deadline. Special note for borrowers with Parent Plus loans. Generally, Parent Plus loans do not qualify for the PSLF limited waiver. If you have a Parent Plus loan and want to learn more about PSLF, we recommend that you contact your loan servicer to learn more about your options. They can walk you through the next few steps based on your situation. Next slide, please. Now, what if you have loans other than federal student loans that are not direct loans? These loans could be FFEL program loans, also known as the Federal Family Educational Loan Program. They may be Perkins loans or even another type of federal student loan. If you want to be considered for the PSLF limited waiver, you need to complete a direct consolidation loan application by that October 31st, 2022 deadline to qualify for the PSLF limited waiver. You can fill out an application to consolidate directly on the Department of Education's website. You must complete that application by the deadline, or else you will lose out on the opportunity to get past payments to qualify towards PSLF. Be sure to act within that time frame to get credit for those past payments. You must also fill out the PSLF form with all of your qualifying employment information in addition to the consolidation application, and those forms must also be submitted by that October 31st deadline to be considered for the limited waiver and to receive credit for past payments. Next slide, please. Now, if you'd like to learn more or share this information with others, the CFPB has created a series of guides to help public service employees qualify for PSLF and the limited waiver. We have guides tailored for several different public service employees, including Peace Corps volunteers, first responders, teachers, and more. Guides are available to download on the link available on this slide. Next slide, please. And before we turn it over to Ken to answer any questions, I wanted to highlight some additional resources for you related to PSLF. The Department of Education has a series of frequently asked questions available on their website, as well as a web tool to help you navigate the PSLF. We recommend that you bookmark these pages so that you can stay up to date on any new FAQs or additional guidance from the Department of Education on loan forgiveness or PSLF. If you want to take advantage of the next steps to consolidate your loans and qualify for PSLF, the link to the consolidation application is here available on this slide as well. If you have additional questions that are specific to your situation, we always recommend that you reach out to your student loan servicer first, as they'll have the most up-to-date and current information on your case. If you run into any problems dealing with them, you can always contact the FSA Ombudsman Group, or you can submit a complaint with the CFPB, and both links are here available on this slide. Next slide, please. I also want to share one additional resource. The CFPB offers a podcast for student loan borrowers, young consumers, and those who serve them. The Financial Intuition podcast focuses on a variety of topics pertaining to saving and paying for higher education, managing money, and repaying student loan debt. Our team will share interviews with financial practitioners, students, and recent graduates, as well as family members and young adults that have successfully managed their money and repaid their student loan debt. You can access our podcast through the following link that's provided on this slide, and we hope that you'll subscribe to future episodes. Next slide, please. Thank you for listening to this webinar today. If you'd like to sign up for our email list or get future notices of webinars or other materials, please visit our sign up link on this slide, or you can always feel free to reach out and email us at students@cfpb.gov. Thank you, and I'm now turning it over to Ken.
Thank you, Scott. We do have quite a few questions for you, so we'll run some of these past you. And if there's anything that you're not able to answer, we will keep track of the questions and do some research and find out how best we can answer these questions at a later date. One thing I want to say, we did hear from a couple of people that they weren't able to hear. That could not hear, so this has been recorded, and you will receive a link later on to the recording. So I'd like to ask some of these questions here that would be of a more general nature. So we have one question here, Scott, from Celine Thomas. Does the limited waiver apply if not working full-time the whole time?
The limited waiver will apply to any period of time that you are working full-time. Remember, if you're not working If you're just working part-time, but you have multiple employers that get you to full-time, that will still count. If you're only working part-time one job and not reaching the 30 hours a week, you won't receive credit for that period of time, but the limited waiver will go back for any possibilities that you may have not been credited for a full-time month here and there. So I still recommend that you explore it a little bit and see if you might qualify for some additional payments to count.
Thank you, Scott. We have another question here from Nate. Must borrowers be in income-based payment plans after applying under the waiver program?
Yes. Well, with the limited waiver, they will go back and give you credit for times that you were not in an income-based repayment plan. But to qualify for the normal PSLF program, there are basically 4 components. One is that you have the right loan, which is a direct loan. The second one is that you're in the right repayment plan, which is an income-based repayment plan. And then, of course, you have to be employed full-time while making payments.
So we have from Christine, do you need to have already completed the 120 payments in order to qualify for the waiver?
No. In fact, many people are receiving up to their 120 credits through the limited waiver. Even if you have not even close to getting to the point of getting to that 120 payments, you still try to apply for the PSLF limited waiver so that you can get full credits for some previous payments that you might have missed out on. Every little bit helps to get you to that 120 mark, so I definitely encourage you trying to go back and get as many as you possibly can, even if you're not close to that 120 mark yet.
So we have from Lorena, what if someone worked 30 hours or more, but their employer didn't consider them to be full-time? For example, they weren't eligible, they didn't work enough hours to get the health benefits, but they did work more than 30 hours.
For the purposes of PSLF, that definition is an or. So you would either meet the definition of full-time employment based on how your employer defines it, which could be something like 37.5 hours to be full-time, but it's an or there. So if you're at least working 30 hours, you will get credit for the PSLF, and your employer should sign off on that on the PSLF form. If you have any problems with that, you should definitely reach out to your loan servicer, as there's other ways that they can go through and give you credit for that.
We have a question here from Larry Smith. If you've had a garnishment taken from your pay, would that impact your PSLF eligibility?
If it's a straight up garnishment, it wouldn't affect your qualification here. What I'm unsure of in the specific question here is whether that garnishment is related to their student loan, which could be an issue. If that's the case, I recommend that that person call their student loan servicer just to get more information. But if it's just a regular garnishment for some other issue, maybe it's a IRS tax liability or some sort of child support, that should not impact it. The only way it would necessarily impact it would be if it's to their student loan payments.
Okay. We have here from Elizabeth Johnson, who had made loan payments from 2008 to 2018, but they weren't labeled as PSLF. Is it possible to have those labeled as PSLF retroactively?
Yes, and it sounds to me that the PSLF limited waiver is specifically for people in your case. So you had the wrong type of loan, or you didn't have the right repayment plan, or simply you just haven't submitted the paperwork for PSLF. So with a PSLF limited waiver, if you make sure you consolidate so everything's a direct loan, and then submit your PSLF forms for all your previous employment for that past time, they'll go back and give you credit for it, and you could be looking at getting forgiveness once you do that.
Okay, we have a question from Elizabeth here, who's she's completed her 120 payments. She submitted her application, and she's just now waiting for the employer, her employer, to approve this. She's just curious, how long would that take? Do you have any idea?
Well, first of all, congratulations on reaching your 120 payments. That is a great feat to meet. I would follow up with your employer. It shouldn't take that long for them to do it. Once it gets to the point that it's with a loan servicer, generally they quote somewhere around the 4 to 6 week mark for them to have reviewed it and give you some sort of credit. Depending on how their workload, it might be a little bit longer. So I don't want you to get too angry at them if they haven't done it by then. But that's about the time that you should start following up with them and asking what the status of it is. And then if you feel you're getting inconsistent information, then you can always reach out to the FSA Ombudsman Group or the CFPB complaint line, because that's what we're here for.
Thank you, Scott. And we have here from Ruthie DiCarmo, if someone retired before the 10 years, the full 10 years, will they still be able to qualify even though the person is retired?
If they had the 10 years of work before they retired and they just haven't received credit for it, they could receive credit for it. However, if they only had, for instance, 8 or 9 years and then retired, but were not working anymore full-time for a qualified employer, they would have to go back and start working again to make up that difference to qualify for PSLF. But they would not get it after the point of retirement if they don't go back to work full-time for a qualifying employer.
We have another question here from Bailey, who's having some issues verifying that their employer is a qualified employer, works for a public library, and the employer is the municipality. And she's wondering if it's a problem. She's saying, I've submitted my employer's EIN, but it hasn't gone through. Is this a common issue? And is there any steps to rectify this?
So it sounds like you've attempted to verify the employment on the PSLF help tool. And let me tell you that the help tool is a work in progress. To give you a personal story about it, I used to work at the U.S. Department of Education. And one time when I was also trying to submit it right after they started using it, they did not have themselves listed as a qualifying employer. So it's still possible. Sometimes it means that you've spelled it slightly differently than how they have it in the system, and sometimes it just means they need to do a little bit of research and add it to the system. You should be fine. Since you're working for a public library and your employer is technically a local government, then that's strictly under the definition of a qualifying employer, so you should have nothing to worry about. And in fact, if you have not submitted your PSLF form, go ahead and submit your form, even though if you don't see that in the PSLF database, because they can still move forward on your application knowing that you have a local government employer.
We have here from Lisa Smith. It sounds like a common one given our current situation. She's currently in forbearance, and will that qualify? How does forbearance impact this?
Let me qualify this in 2 ways here. The CARES Act put everybody into a payment pause with federally held government loans. If that's what she means as forbearance, then she is receiving credit for the last 2 years where there has been no payments on her account. If she's had a temporary pause where she's gone into forbearance, that means that she hasn't had a payment in that period, and she would not normally receive any type of bill or due date, so she's not receiving credit for the payment period of that. I still recommend that she have her loan servicer take a look and still pursue the PSLF waiver with the Department of Education, but you may not receive full credit for those periods where you're in forbearance because there's no bill being generated. So it kind of depends on what she means by forbearance there.
So then someone who has been in forbearance over these past 2 years due to the COVID fun stuff,
correct.
That person's receiving credits.
Yeah, if it's been the last 2 years because it's been the payment pause, and we try to avoid using the word forbearance there, but a lot of people do use that term synonymously, then that has nothing to worry about and is receiving credit for their payment during that period of time.
Thank you, Scott.
Or it's March of 2020.
So we have a question from Celine Thomas. Under my repayment plan, she currently pays 0. Good for you, Celine. Is this a qualifying payment?
Yes, that is definitely a qualifying payment. That means that you have some sort of income-based repayment plan, and after they've evaluated your income, they've determined that you pay a $0 payment. And so for that period of time that you have that $0 payment, that counts as the payment. It sounds like you have the right payment plan, which probably means you also have the right loan. So the only thing else you need to qualify for that payment period to get PSLF credit is ensuring that you put your PSLF form in for your employment full-time.
We have here from Kate, is there a way to check if you have already submitted a PSLF form? So is there a way to check in the status?
Yeah, the best way, if you're unsure if you did it, the number one way to know would be to check with your loan servicer. Up until recently, every person who submitted a PSL form had been switched to a particular loan servicer, and there would be to tell you how many payments you've gotten credit for, and that's generally how you know. If you're unsure, call your loan servicer and say, hey, have I submitted any paperwork for PSLF? And they'll be able to tell you if you have or not.
Here's a question I have received a few times in the past. Are there private universities that qualify for PSLF?
Yep, private nonprofit universities qualify for PSLF because they're identified as a 501c3 or similar code from the IRS. So if you're thinking about a place maybe like Harvard University or Grinnell University, those all count. Where you get a little tripped up is that there are private for-profit universities, such as like the University of Phoenix or DeVry or Strayer. Those do not count for PSLF because they are for-profit and do not have that IRS designation.
So we hear from Kira, why are Parent Plus loans treated differently for PSLF?
Mm-hmm. If you go to that studentaid.gov website, there's a little bit more information on the PSLF. And we recommend you contact your loan servicer because it is a more difficult process for you. But the Department of Education gives two warnings when you're looking at qualifying for PSLF with a Parent Plus loan. The first is the employment requirement is with the borrower and not necessarily the student. So that means that the parent that borrows the loan in their name would have to meet the employment qualifications to get forgiveness. So that's the first thing to keep in consideration. The second is that the Parent Plus loan by itself does not qualify under federal regulations to be in the right repayment plan. You can't have an income-based repayment plan for a Parent Plus loan. So what you have to do is you have to go through an extra step of loan consolidation and turn that into a direct consolidation loan with your loan servicer to thereby switched into the right repayment plan. So there's a bit of an extra step there that you do with your loan servicer to make it happen. It's possible, but just we always recommend go to your loan servicer. They can take you step by step through that process.
Thank you, Scott. One more question here. What does it mean that the payments don't have to be non-consecutive?
Sure. I'll give you an example of myself. So for a few years, I worked at the Department of Education, got about 6 years of credit towards PSLF. And then I took 2 years off and I went to work for a for-profit private sector company. And so for those 2 years, I was not receiving credit for PSLF, but I still had those 6 years credit for when I worked for education. And so after those 2 years, I went back to the Department of Education and continued working there. So I picked up just where I left off, basically adding to that 6 years with the Department of Education, even though there was that 2-year break in between. And then lo and behold, 4 years later, I qualified for PSLF. So you don't lose credit for past employment periods that you get for it. It's just you won't get credit for the periods of time you don't work for the right employer.
Thank you, Scott. We have several questions here that will be more particular to your particular loan, like timing issues, those kind of things. We encourage you to reach out to your loan servicer to answer any of those particular specific questions. We've had questions here. Will the slides be available to the attendees? Yes, we can make those available. Again, I want to stress that this has been recorded, and we will make this available to everyone through the recording. and that will probably be sent out by Michael Dowling and Emily. So you will be able to get some of that information. And so for that, a lot of these other questions are very particular. We encourage you. We have one question here again from Veronica. Are nonprofit organizations qualified? And Scott, I believe you'd say if they have the 501c3.
As long as they have that 501c3 designation, most nonprofit groups will qualify.
Yeah, that was a good qualifier for the private universities. As long as they are a nonprofit private university, then yes. But for-profit, no. Okay, that's all we'd like to have for right now. Again, we encourage all of you, if you have any particular questions to your particular experience, we encourage you to reach out to your loan service provider. But the slide deck will be made available to you so that you will have some of these links that you may access. And again, a recording will be made available to you. I'd like to thank all of you who attended for attending. We greatly appreciate this. We greatly appreciate the opportunity to answer all of your questions and present this information to you. The Consumer Financial Protection Bureau is here for consumers, and you are all consumers, and we're glad to be able to be of assistance for you. So with that, I'd like to conclude this, and thank you all so much for taking the time, and we look forward to helping you out in the future. Thank you very much for attending.